Hello everyone and welcome back to the Dinar Update channel. Today we're taking a deep dive into the complex world of the Iraqi dinar, examining the challenges it currently faces and what the future might hold. From whispers of currency reform and international integration to geopolitical pressures and economic hurdles, there's a lot to unpack. We'll analyze the latest reports from key sources, discuss the risks and potential rewards for dinar holders, and explore the factors that are shaping Iraq's economic future. If you're invested in the dinar or simply curious about its trajectory, this update is essential viewing. Let's get started. Newshound Guru Samson draws attention to Iraq's progress in adopting international accounting standards, a move that will begin in 2026. This is a major step for Iraq, aligning its financial system with global practices and facilitating its integration into the international market. Meanwhile, Newshound Guru Militia Man reports that Iraq's tax revenues have grown by 22%, reaching 4 trillion dinars. This is a notable development because Iraq's currency was historically based almost entirely on oil revenues. However, as Iraq's non-oil sectors have expanded, the country now has additional revenue streams that contribute to its economy. This is a fundamental shift in the country's economic structure, which could have substantial effects on Iraq's financial standing globally. The Iraqi dinar's future is still uncertain due to multiple challenges. Geopolitical instability in the Middle East, including the ongoing Israel-Hezbollah conflict, has intensified, affecting Iraq directly. Investors are becoming more cautious, pulling their money out of Iraq due to fears of broader regional conflict. Additionally, tensions between the United States and Iran are escalating, with Iraq caught in the middle. The targeting of U.S. forces in Iraq and retaliatory attacks add to the uncertainty, further weakening investor confidence and making the dinar vulnerable to depreciation. Another factor weighing on the dinar is the risk of sanctions. The U.S. has already imposed restrictions on dollar transactions in Iraq to combat money laundering and the funding of militia groups. If further sanctions are applied, Iraq's banking system could suffer significant harm, restricting foreign investment and hindering economic growth. The country's financial system could face serious challenges, further diminishing the value of the dinar. For dinar holders, the situation is complicated. Iraq's currency was devalued by approximately 20% in late 2020, which significantly reduced the purchasing power of Iraqi citizens. This devaluation shocked many and has made it difficult for them to preserve their wealth. In early 2023, Iraq attempted to strengthen the dinar by adjusting the official exchange rate to 1310 dinars per US dollar. However, this change has not been enough to stabilize the currency, and the dinar continues to struggle against the dollar, particularly in unofficial markets. As of February 2025, the exchange rate remains at about 1310 dinars per US dollar, but experts warn that it could weaken further. Some predict that if economic pressures persist, the exchange rate could rise to 1415 dinars per US dollar. For those holding large amounts of dinar, this could lead to significant losses in value, making it harder to exchange dinars for stronger currencies like the US dollar. The situation is further complicated by Iraq's new banking regulations, which ban cash withdrawals and transactions in US dollars. This move, aimed at stabilizing the economy and reducing corruption, has made it harder for businesses and individuals to conduct transactions, particularly those relying on dollars for international trade or investment. The restrictions have also made it increasingly difficult for Iraqis to access their money, further hindering economic participation. Many have turned to unofficial markets to obtain dollars, widening the gap between the official exchange rate and the real market rate. This in turn damages confidence in the dinar. The risks for dinar holders are significant. The currency could continue to lose value over time, and with Iraq limiting dollar transactions and tightening banking controls, exchanging dinars for US dollars may become even more difficult. Iraq's economy remains heavily reliant on oil revenues, and any drop in oil prices could push the country into deeper instability. Political instability also continues to play a critical role, and the Iraqi government may face further challenges in implementing necessary financial reforms. Despite these challenges, there is still a possibility that Iraq could stabilize its economy in the long run if it successfully implements strong banking reforms, increases transparency, and attracts foreign investment. This could lead to a gradual strengthening of the dinar. However, as of February 2025, Iraq faces substantial obstacles, and any significant appreciation of the currency in the near future seems unlikely. So there you have it, a comprehensive look at the current state of the Iraqi dinar and the economic forces at play. As we've seen, the situation is complex and uncertain, with a mix of challenges and potential opportunities. While the possibility of future growth exists, it's crucial for dinar holders to be aware of the risks and stay informed about market developments. What are your thoughts on the information we covered today? Share your insights and concerns in the comments below. I always value your perspectives. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell so you don't miss any future updates. Until next time, stay informed and stay tuned.